Hi, good afternoon everyone. My name is Ram Dhameja. Welcome to my channel. Today is 14th of February, Valentine's Day, but it has not been a really great day for the markets. So the markets are in a bit of a bother as we speak, and there is a lot of weakness that has started to show in small cap, mid cap, momentum, alpha names. Not that it was not there, but what was happening earlier was that markets were falling for large caps, and small and mid caps were somehow holding out. I'm talking about a couple of months back. So when Nifty was down minus 13% couple of months back, small and mid caps were in the range of 10 to 15% down. But what has happened now is that when the markets went up and then again came down. I'm talking about Nifty now. Nifty is again at minus 13 odd percent down, but small caps are now down minus 22% from the top, and mid caps are down about minus 19% from the top. That is one significant change that has happened. So the market breadth is weakening. The non-quality names or low-quality names are going down faster in the market, and the market is now firmly in the grip of bears. Now, what happened today was that the market again retested 22,780, and for the third time, it has kind of bounced back from that level. I don't know whether it's going to hold or not. The chances of it holding out are fairly remote, if you ask me. But till now, it has been able to hold it three times. Now, let's see whether the fourth time the market is lucky enough or not, or maybe it just might go down today itself. Who knows? There's still 30 minutes left for the market closure to happen. But as we speak, we are at 22,925. So 22,780 breaking looks remote from here, but you never know the way market was tanking in the about an hour back. So where are we going from here? What are the cues looking like? I will take you through all these things in the video today, and we are then going to discuss what are the possible levels that we can look out for. So this is how the Nifty 3-minute chart is. We opened today, and from pretty much the open we have been falling down, and we broke 22,780 once, twice, but after that we took some support, and here we are at 22,920 odd levels as we speak. So it was somehow able to recover some lost ground. But if we look at, this is the daily chart for Nifty. If you look at this, this is the third time we are testing this bottom. First we tested it on 27th of January. Next we tested about a couple of days back on 12th of February, and today we are again testing it on 14th of February. So three times we have been testing this level, and we have been making lower lows and lower highs. So if you see, this was one lower high we made, then again a lower high, then a lower low, then again a lower high, and then if we continue in this pattern, then we are looking at a downward movement from here. If that happens, then of course that won't be very good news for the markets as a whole. Now, coming to the next chart, how are the indices behaved? Now, all these indices were down minus 4%, minus 3.5%. I'm talking about the small cap. But it has recovered a bit. I don't know whether this recovery is sustainable or not, but as we speak, it is down minus 3% from the top. Now, small cap from the top has also gone down by around minus 21% from the top. So this fall of 3% today has taken small caps to the bear territory of minus 20% and below. And then these weak indices like media, public sector enterprise, and so on have crossed 30%. Some of them have crossed 30% from the top, and some of them will cross 30% from the top. Like media has crossed 30%, PSE will be at 30%, and so on. Mid cap, as you can see, was down minus 3%, 3.5%. Now it is at minus 2%. This also will be in the closer now to minus 20% range. So as you can see, in all these indices, we have entered the bear territory. The bear market is defined as anything which is 20% or below is defined as a bear market, and 10% and below is a correction. So all of them are now entering a bear territory. Nifty itself with today's fall will be about minus 13 odd percent from the top, and that doesn't look like it's going to 20. Like this is Nifty, as you can see over here. That doesn't look like it's going to go to 20, but if Nifty falls 13, then you can expect these indices to fall at least 25, and that is what I've been saying for such a long time. and this is exactly how it is playing out. Now small caps are down minus 21-22%, and Nifty is 13%. Now if Nifty goes up from here, then yes, then these indices might also retrace back from 22-23%. But if Nifty falls further, then you can expect these indices to go to minus 30, minus 35, because that has been the history. This is how these indices actually end up falling. So this is the picture, which is not very pretty. Only IT was up today at 0.05, and VIX is up, which is but natural. Now coming to the small cap index in detail, how does the chart for small cap index looks like? Now this is the chart. As you can see, we have retraced full 1 year gains in small cap. This is the same level that we were there in January 2024. Now we are in February 2025. As you can see over here, this was the first time we crossed this 14,800 odd, and we went all the way to 18,800, and then there has been a brutal correction, bringing it back to 14,300 bottom and 14,500 as we speak today. So entire 1 year of gains have been wiped out in small cap, and it is back to the same level. Now anyone who started a SIP over here would also be in loss, right? So a 2-year SIP probably would be, I guess, still in money, or maybe it might be flat, but 1 year SIP will be negative, and anyone who entered over here in lump sum would be down minus 25%. So that is the challenge when you're investing at market highs. You need to be very careful, and you need to follow asset allocation strategy so that you don't get stuck over here. So this is the chart for small cap. It's not looking very great, but yeah, this is what it is. Now coming to how the heat map looks like. This is the Nifty 50 heat map. So as you can see, ONGC is down minus 1.8, Coal India was down, Sun Pharma was down minus 2.6, Bajaj Auto was down. All the names are down, even though as we speak market is down minus 0.37, but all these Adani names were down very much. BEL was down, Trent was down, so all the names are down. If you look at Nifty Next 50, again LIC down, IRFC down, PFC down minus 3%, REC down minus 4%, Zydus down minus 4%. So Nifty Next is also down minus 21% from the top, and this was one index which did really well in the last bull run. HAL down minus 4, ABB down minus 3, BHEL down minus 3.6. So all these names are coming under pressure, and then there is no point talking about the broader market, because you will get names which are down 6%. So everything is pretty much down. Everything is in a sea of red. So there's no point talking about this Nifty 500. But yeah, you can see how the things are stacking up over here, and especially in the names which were doing very well, like capital market plays and infrastructure stocks, all in real estate stocks. All of them are down like hugely. So this is not a very pleasant scene to see. Now coming to what happened in the options today. This is the options chart. The open interest is at 0.65, which is not hugely negative, but yeah, it is in the bear territory for sure. So last week we were seeing that open interest was revolving around 0.5, 0.55, 0.48, 0.49. It had even gone to those levels, and we saw that market corrected. We are at 0.65. There have been more calls that have been added than puts. So market setup is, from the open interest point of view, is definitely slightly bearish only. Even if you look at the top 10 strikes, it's at 0.81. So nothing, I mean, it's negative. That's all I can say right now. It's not positive. So this open interest will have to change if the markets have to rally up. And this is how the straddle premium is. We opened at 355 and we are at 335. So there's a 20-point decay. But within that 20-point decay, we have already moved some 500 points for the day. So straddle premiums don't hold any value. And when the market is in such a big turmoil, then your stop losses will get taken out. Today, like for example, thankfully the call stop losses didn't get taken out, and it was the put stop losses that got taken out. And the calls actually more than or almost made up for the losses on the put side, because put, if once the put went, then the calls actually decayed quite nicely after that. So so it was mostly a flattish kind of a day for me. And that is what you aim for on such days. If you can move out with a flattish PNL on days like this, then you actually think that you probably have done all right for the day. Now coming to the international cues, how the international cues are stacked up. The worst part is that international cues are all good, right? but we are not taking into account any of the international cues. Now one might argue that when international cues were negative, we were still rallying, so why should we follow the international cues right now? That's also a fair argument. So if you see, Nasdaq is up 1.4% yesterday, futures are up, right? Dollar index has gone to 106, it's below 107 also now, which is great news. Brent oil is 75, all good. USD INR is 86.8, okay. Gold is again at an all-time high. So gold is not stopping. No matter what happens, gold doesn't stop. It continues to run up relentlessly, and that is why it is very, very critical to have a perfect asset allocation in place. Because on times like these, gold protects you and your portfolio tremendously. So this is where it is. So this is how the market looks like for the day. I know it's very tough during these kind of phases when the market is down, the portfolios are bleeding. But this is also the time to see how your portfolios were constructed. If your portfolios have been constructed well, then you'll be able to weather the storm. But if your portfolios have not been constructed in a nice way, you have too much of non-quality, you have too much of small cap exposure, etc., then you would be feeling the pinch. So my submission is, please construct your portfolio sensibly, have asset allocation in place, ensure that you have allocation to gold, to international equities, to fixed income, so that when there is time to rebalance your portfolios, you can do that. When there's time to buy, you can do that. For example, indices falling 30% is probably not a bad time to add some of these names. I did that today. So one can actually look at maintaining the asset allocation. That is very important, and constantly rebalancing their portfolios. That is also important. And as I have said before, I also help the clients build their portfolios through mutual funds. I don't charge any fees for that. So if anyone is interested in that, they can contact me on the form given below. I would love to analyze your portfolio for you, free of cost. And then if you think that you want your portfolio to be constructed through mutual funds, then I'll be very happy to do that as well. So that is something that I do. I'm a qualified mutual fund distributor as well, and NISM certified. So that is also my forte. So basically, coming back to the point, that this is the time to also look at your portfolio and add to indices if you haven't done that, and you think that some indices can be added at these levels. Like today, personally, I would have added some small cap, I would have added some alpha, and so on and so forth. So these are the indices that I feel that probably can do well in the long term. So that's it from me now. I know it's been a tough day for all of you. Portfolio wise, options wise, it was still okay. And probably going ahead next week, we don't know. The cues are not all that great, so we will have to see how things play out. And let's see how we go from here. During such phases, it is important to ensure that you don't lose too much, and you come out all right on the other side. Protect your capital, that is very important, and play with stop losses only. Don't ever venture with open positions without a stop loss. So that's very critical. So that's it from me now, and I shall see you soon, and have a nice weekend, and have a nice Valentine's Day, and forget about the market for some time once the market closes, and come back refreshed on Monday, and I shall see you then. Take care. Bye bye. See you.